Today we're going to be looking at the active trader's iceberg, where we explore 5 different layers of true ascendancy. Well, I won't keep you waiting, let's get into it. On level 1 we have buying and holding. This is the most boring of all ways to make money. Tried and true. Next we have buying a stock because your friend said it's going up. This is a great idea if your friend is a genius, and it turns out that 99% of friends are. Next we have the old adage that a bad trade becomes an investment. This is unfortunately where many newer traders find themselves. It's unfortunately also where many experienced traders find themselves. This is followed closely by an actually bad investment. And lastly on level 1, we have scrolling Reddit. This is where your true path to degeneracy begins. Next we have level 2. This is where the fun starts. If you've made it to level 2, you've started to burn some brain calories. You're unfortunately at a local minima where you might not yet have the skill to make some good money trading, and you're also not having a lot of fun just yet. But don't worry, that'll change. We're still just scratching the surface. Here's where we first see the quintessential pillar of trading, buying low and selling high. We also have basic technical analysis. This is where we start to see the zodiac signs in the candlestick charts. This is where we start to see the trees through the forest, or something like that. We also have advanced technical analysis, which is surprisingly the same thing as basic technical analysis. We also have buying and holding shares of ETFs that index the price of gold. Maybe there's money to be made here, but holy crap, that's boring. You've started to become influenced by Reddit, but you're not yet ready to move to level 3 until you've installed Robinhood. When you finally embrace the terrible path you're on, congratulations, you can now descend to level 3. At level 3, we are fully submerged. We are taking a full drink of our briny surroundings. You'll find a mix of traders at this depth. At this point, we have now inverted, and we've resorted to buying high and selling low. Our remarkably consistent negative gains have caused us to become timid. We're making sure to sell our shares before earnings to avoid any volatility. Although a great catalyst for our value trades to regress to the mean, we don't yet have the diamond hands. Next, we have enabling options trading and not blowing up our account. This is a pretty difficult needle to thread. After that, we have enabling options trading and blowing up our account. This one's much easier. It's also more fun, but the returns aren't as good. However, both scenarios are equally as good because they're both equally as exciting and they both accomplish what you really came here for. Next, we descend to level 4. At level 4 of the iceberg, when we look up, we see negative slope above our heads. We also see negative slope when we look at our returns. At level 4, we're now consistently opening long calls or long puts, even though they're overpriced because we know better than the market. We're offsetting some of our negative alpha here by opening covered calls and cash secured puts, which are basically the same thing. This is where you short the option and hold collateral. We'll go over the pricing for these two things in a future video. Next, we have rolling your cash secured puts to avoid assignment. This is where you're physically afraid of owning the shares, so you're willing to pay the trading fees to keep them at bay. At barely below this, we have the wheel, where you're willing to accept assignment and then parlay those shares into a covered call. At the bottom of level 4, it has finally dawned on us that we could have been performing fundamental analysis this whole time. Welcome to level 5. If you've made it here, you're either extraordinarily lucky or extraordinarily unlucky. Something has either gone tremendously well or horribly wrong. Near the top of level 5, we have credit and debit spreads. These are extremely perilous. You can easily lose 100% of your investment, but you could make 5%. Some subset of deep divers will have adopted poor man's covered calls. This is the same as a covered call, except you use a long call option as collateral instead. This gives you extra leverage. Some snipers will also start opening caller spreads. This is an arbitrage spread where you capitalize on the difference between a covered call and a cash secured put. We'll go over these in more detail in a future video. Those near the darkest depths have also begun engaging in the world's most dangerous practice, alongside skydiving without a parachute and dropping the flashlight: short selling. Short selling is one of the few things you can do that will result in losses over 100%, and you'll need to pay borrowing fees the entire time while you're doing it too. Finally, you'll know you've made it to the very bottom of the iceberg, when you look down and there's nothing else below you besides an inky black abyss. Finally, at this reverse summit, there's only one action left to take: uninstall Robinhood. Thank you for watching so far. If you like this type of content, please like and subscribe. Let me know what you think down in the comments below. Now it's time for a brief channel update. We finished the first week of uploads, so we've done five videos, one a day, Monday through Friday. I want to know what type of content you guys are into, if you like the format so far, if you want to see things done differently. Would you prefer to have more polished videos that are released less frequently? Let me know what other kinds of changes or things you're into.